wealth does not equal to having more money, but it is about the time and good mood that you have by doing what you want.
When you try to copy another person's trait, you don't really understand the point of view of that person or the current situation of the person.
The key to stay wealthy is to think about how to survive.
Progress happens too slowly to notice, but setbacks happen too quickly to ignore. Many plans fail, not because they were wrong, but because they were in the situations that required things to be exactly right. Hey everyone, welcome to the Future Business Podcast by Empowered Liion. I'm Daniel.
And I'm Marina. We are here to guide you to turn your passion into a fulfilling career and live the life you desire.
And it is possible to make money doing what you truly love, and we are doing this right now.
Yay! Alright, Daniel, would you like to do a quick recap, like what we have shared last week?
Yeah, so basically we have talked about this book called The Psychology of Money for the past 2 episodes. And we have mainly focused on the mindset of that book. So for example, last week, right, if we talk about the first thing, it's this. Not all prices appear on labels, but everything has a price to pay.
Of course, it can be not in monetary form, but in terms of time, energy, and even the relationship among you and others.
Exactly, and especially if that item is free, right? It is not really free.
Yes. Then we move on to the second one, which is luck and risk. So actually, we don't need to depend like which is the best, or is this really lucky or are we unlucky? So we just need to do the best decision for us at the moment. As long as at this moment it is the best thing that we can do, then it will be fine. You don't need to think too much about the future.
Yeah, and then last week we also talked about this. Every job looks easy when you are not the one doing it.
Of course not, because it might look cleaner is a very easy job, or dishwasher is also a very easy one. But when you actually do it, you will discover those challenges that you will meet during your working hours.
Yeah, definitely. So this is what we have covered for the last episode, and today it is the final episode of our The Psychology of Money book series.
And we are finally going to cover about the strategies.
Yeah.
Yes, what are the strategies that we can apply other than the mindset?
Yeah, so the author talked about this universal strategy for being wealthy. And he says this: be aware of taking financial cues from people playing a different game than you are.
Oh, okay. What does it mean?
Okay, so it means there are many cases in investing, right? There are so many people, they try to copy other people's trade, their positions, and so on. Yeah, so when I was an investing coach, the students, those beginner students, they love to ask me this question: what stock to buy now?
Because they think you're successful enough, you can definitely make more money than them. So they just want to follow your path.
Yeah, and because I am a coach, so they think that whatever stock that I pick, it should be the best stock, right?
10x.
Yeah, but the problem is this, when you try to copy another person's trade, the investment, whatever, but you don't really understand the point of view of that person or the current situation of the person. Maybe that person's capital is larger or smaller than you are, and then the portfolio allocation is different. Maybe he is just putting maybe 5% of his portfolio into this stock. But for those people who are copying, maybe they try to put like 50% of it.
So I think we can't just copy others if we don't know them well, unless you are doing exactly same thing, like same entry price, same time, then you have a very similar allocation and also your capital.
Yeah, but this is pretty tough for the stock market because not everything is transparent. I mean, it is not transparent at all. You cannot
True.
see a person's trade in real time.
True.
Yeah, this is not good for the stock market. But in terms of, let's say, crypto market, no, that is possible because everything is recorded in the blockchain. So you get to see the person's capital, the person's trade, everything. But I still would like to advise that don't just blindly copy other person's entry or positions. Do your own research is the most important thing.
Definitely, research is important because we can't just blindly follow, right?
Yeah.
What if others purposely tell us the wrong thing?
I think if we are in the stock market, then this may be true. Like people just tell others, just buy this stock, it will go up. But it is your responsibility to do the analysis.
Of course.
Is what they said correct?
Then moving on to the next point, the hardest financial skill is actually to get the goalpost to stop moving. Because, once we get something, every time we will definitely desire for more, we want more, because the thing is never enough. For example, if we got a bowl of chicken rice, then we'll ask for maybe a bowl of soup to eat with the chicken rice. Or you want to add some chili sauce or other sauce like char siu sauce, then I would say for those who don't even have a proper meal, one share of chicken rice actually is more than enough for them, because all they want is just keep their stomach full without starve themselves. But then for us who got the thing, we always feel like something is lack.
Yeah, so to make it more relatable to investing, for instance, let's say when you want to buy this stock, then you are thinking that, okay, let's say the stock goes up by 20%, I will exit and I'll take the profit. But after you bought and the stock price goes up by 20%, you think probably it could go up to 40%, 50%. So you just keep waiting for it. But before the stock reach like 50% profit, it just like goes down all the way and then you lose money.
Yes.
Yeah.
So that is a very good example. So instead of feeling we don't have enough, why don't we start to be grateful? Because being grateful helps you to focus on the thing that you have instead of what you lack.
Yeah, so being grateful in a sense of investing could be not just DCA out, mean to say you just sell a bit of your position on the way up. So that's where you gain a bit of the profit at the time. But of course, when you sell it out, means that your future potential will be less, but at least you are securing your profit. Yeah, so we must be grateful for all of our profits in the stock market.
Yes, you must aim high, but don't aim higher and higher.
Good point.
All right. Then next one I would say is focus less on specific individuals and case studies, but focus more on those broad patterns.
This one, it hits a lot of people because they always try to quote someone says something or someone did something and then they just follow the person. Maybe they say no, Warren Buffett does this strategy, so that's why he can be rich. But there is just one person, one example. Maybe the time when he was born and the time when he did investing, the environment is so different than what we have today. So if you just blindly copy his strategy exactly, it may not work in today's world.
Or someone says he want to be a second Mark Zuckerberg.
Uh-huh.
I feel it's so funny because you and Mark Zuckerberg is totally different person, and you cannot fully depends on him, like what he does actually you can do it too. It's not this case because maybe you did the same thing but the result might be different.
Yeah, probably even let's say you have the same talent as him. You know, he does programming so well, and you have the same ability, but maybe he has the network, he has the resources, but you don't have.
Yeah,
Yeah,
that's
so
very important
yeah,
also.
this leads to different results also.
Agree with
Yeah,
that.
so what we should do instead is to study broad patterns, mean to say, you know, for a large group of people doing the same thing, what is the probability of them achieving, whatever results? And then from there you can see what is the average instead of the outliers.
For example, people doing this thing, 80% of them are successful. So maybe we can learn from them.
Yeah, so try to do this and you have 80% of the chance of being successful instead of aiming for that less than 1% of the people.
Okay, got it.
Yeah.
Then next one is that in the book they actually talk about the distinction between wealthy and rich. This one actually I have a lot to share because a lot of people just say they want to be rich, but they never say they want to be wealthy. This is what I've been hearing since young, because like a lot of people thought that being rich is everything in the world. You can do whatever you want, but I would like to emphasize that being rich, right? It just simply means you got money.
Or maybe being rich means that you buy a lot of assets to show people that you are rich.
Especially those agents. They love to show off their cars, the houses they have bought.
Yeah.
But do you know the backstory behind of the people? Because you see them having those sport cars, then or they have a big house, but you won't know actually every month they're paying a huge amount of installments.
Yeah, and the most important thing is they have to keep working in
Yes.
order to pay those
So
debts.
one day if they stop working already, then they will be in debt. They have no money at all to pay for it.
Yeah, so in this case, they have no choice but to keep working. So if they have no choice, it means that they are not wealthy.
So in our context, being wealthy means you've got a freedom and you've got more flexibility to do whatever you want.
Yes, 100%.
So I remember the book, it actually says that the highest form of wealth is that every morning when you wake up, you can say, I can do everything that I want to do.
Yeah, so that is the most important takeaway that I mentioned in the first episode of this book.
100%. And I think instead of saying that we want to be rich, why don't start from today we change? We say we want to be wealthy.
Yeah, we want to have that freedom and flexibility to choose what we want to do in life.
And being wealthy is not just purely about rich being or you have a lot of money, but it can be in 5 different forms like the financial wealth, your mental wealth, physical wealth, relational wealth, and even your spiritual wealth.
Yes.
And being wealthy means that you must have the, how to say, you must find your meaning and fulfillment other than those material things.
Yes. And these, from what we mentioned just now, these are the universal strategies for being wealthy mentioned by the author. So let us move on to the next part, which is the long-term financial strategies. So what is the first one that he mentioned?
So the first one here is actually critical because it says the key to stay wealthy is to think about how to survive. So you've been wealthy, then the next step is you need to maintain the state, right? So it actually teaches about how to maintain it.
Yeah, so let's say in terms of investing, right, there are people, let's say, who start from like $10,000, a small portfolio, and then they try to grow to 100,000. And then from 100,000 point of view, those people still want to use the same aggressive strategies to make $1 million. But at that point of time, at 100,000, right, they should be thinking about how to change the strategy to kind of accumulate the wealth This is very crucial because most people, when they enter the stock market, they just think, I want to make how much money, I want to make a lot of money, a lot of profit, but they don't really think about the backside, like how to keep their capital at least. So building wealth is not like you just hit a jackpot and then you just got all the profits that you have. It is really about how do you catch that profit. Like what I mentioned just now, you just DCA out, you just sell a bit at a time to accumulate your profit instead of just having an unrealized gain of like 1000% before you sell off.
So the wealth is not built in one night, but step by step.
Correct.
Then I think the compounding effect is actually a very essential factor to make you a wealthy person.
Mm-hmm.
Don't you agree?
Yeah, I agree about compounding. It really takes time for it to build that wealth slowly instead of just one single trade to make you millions.
So the key in getting the compounding effect is that you have to be patient enough, as patient as you can, because the compounding effect doesn't come in a day, but you need a very long way to go. It's a long run.
Yeah, so the author also talks about this. Progress happens too slowly to notice, but setbacks happen too quickly to ignore. This is so obvious in the stock market in the sense that when the stock market grows, right, when the market goes up, it goes up by maybe like 1%, 2% in a day, and people barely notice that. But when there is a market crash, one day it can crash 5%, 10%, and people are panicking. They just quit the trade, they just exit the position. But they didn't notice that after the crash, after the consolidation, the market will go back up, but in a slow manner. And then eventually the price, the market will go higher than it were before.
I think like my portfolio currently, because the Apple, I hold some shares, but the price is not actually moving. Like it's here and there, go up a little bit, then come down again. But for those like Tesla or even Rocket Lab that can shoot up very fast or go down very fast also. So I think the biggest setback of people, right, of human, is that we tend to focus on those things which are quick and bad. However, for things which is slow but good, we tend to ignore or we put less attention.
Yeah, so this is our human behavior, and we got to accept this, but we also need to be aware of our problem here, and then just make sure we don't get too swayed by the negativity bias.
Of course, we need to be aware of it and then start to embrace those things which are slow.
Yeah, so we have talked about building wealth. So let us get into something that is equally important, which is risk management and flexibility.
Yes, and we got a term which is margin of safety. This is really important because you will know in which area you will be safe. For example, you are fully relying on your return in the stock market to survive, right, for your daily expenses. So you expect it to grow maybe 8% a year so that you can withdraw out that profit for your daily expenses when you have retired. However, you must also think that the stock market won't move according to what you want, right? So if the profit is lesser than 8%, can you still survive?
Yeah, this is a really good point. So the author mentioned this in the book. He says the problem is many plans fail not because they were wrong, but because they were mostly right in the situations that required things to be exactly right. So as you mentioned in the example that the person needs 8% of the return. to make a living. But if it drops, let's say to 4%, let's say if the person cannot live in a 4% return, then the person doesn't have margin of safety.
Then maybe he or she want to find somewhere to cover that another 4%.
Yeah, and then the emotion will get affected because right now the money, the return is not enough to cover the expenses.
Okay.
Yeah, so to solve this, right, let's say you need 8% of the return to make a living, then you either try to increase the percentage, like let's say, can you make 12% instead? Or maybe you just double the capital you need. So instead of, let's say, $1 million, you can have a capital of $2 million to make 8%.
Got it. So we don't aim just nice 8%. We should always aim higher so that when it doesn't meet the expectation, at least we can still survive.
Exactly. And
Okay.
this author also covers the next concept: be financially unbreakable, especially during investing. Being conservative and even holding some cash during the bull market is essential.
Because cash has the highest liquidity, and in case of any emergency or whatever, we can quickly use the cash to help us.
Yeah, this is quite hard to do because during a bull market whereby everything goes up, you will feel like, when you're sitting on cash, then the cash is doing nothing and it has a inflation rate of a few percent a year, so your money is like, the value is like decreasing.
Oh,
Yeah, but holding that cash is important because, as you said, during emergency times, you may not have enough time to exit the position and so on.
or you just simply don't want to exit because the price is so high than the price that you have entered.
Exactly.
And again, from the owner's perspective, right, wealth does not equal to having more money, but it is about the time and good mood that you have by doing what you want. So if you are affected by the cash that you don't hold enough, right, then your mood is highly affected, which is not good also. You don't have a very synergistic living. So instead, we need to spare some cash on hand so that we are not afraid of those economic downturn. Because we have everything prepared, we have planned for the worst time to be coming.
I truly agree on that.
Because I remember last time also beyond in the board, you remember the author?
Yeah.
He shared about nothing is permanent, no matter it's good or bad. So whenever we are having good time, we must plan for the bad times as well.
Yes. And then this links to our last point of today's episode in risk management. You can lose half the time and still make a fortune.
Because let's say in the stock market, the price won't be so bullish, right? The market won't be so bullish all the time. It will definitely be bearish sometime.
Or even, let's say, during the bullish time, and let's say a person invests in like 10 different stocks, there won't be a point, like there will be a point where all 10 stocks goes up. That is like extreme case. But most of the time, there will be some going up, some going down. And then because when I was an investing coach, I've seen a lot of students, what they did was that they focus on the losing trade. They keep saying, why do I lose money on that stock, whatever, but they don't pay attention to the stocks that goes up.
Just that what I've shared just now, people tend to focus more on those things which are bad.
Yeah, and they don't realize that if they were to average out the gains from the stocks that they are winning, they can cover the stock they are losing, and they even make a net profit from it.
Yes, that was me previously because I invested in different stocks, right? Then when some things go up, I feel like, okay, I expect it to be like this, but when something doesn't meet my expectation, I'll start getting very upset. So, but now I think I focus more on the total profit that I have gained because I think all I want is just the total profit, right? It doesn't mean that everything has to go up so that I can get more, but I'm grateful enough with what I have already.
Yeah, Belle, I think you are being a better investor. All those institutions, all those fund managers, they all look at the portfolio level. There is like very rare that people look at like individual stocks, like individual profit and loss. They just look at the entire portfolio. If it is going up in long term, then it means it's a good one.
And even the stocks in the S&P 500, it doesn't mean that everything will go up, although the S&P 500 is, growing gradually.
Yeah, so try to move away from like being stock specific to just look at the overview of that portfolio. That will be a better strategy for long-term investing.
And not even in just investing, but in your life as well. If you're doing a lot of things at the same time, or you have a lot of friends, let's say, then someone treat you very nicely, but maybe 1 or 2% out of 10, they treat you so badly, they don't like you at all. Why don't you focus on the 8% that who love you so much instead of those 2, right? It doesn't work anyway.
Yeah, this is simple to understand but hard to really execute well.
True, it needs time to practice. So starting from today, once you're aware of it, it's perfectly fine if you can't change immediately. But of course, as human, we need to grow. We need to learn continuously. So start by aware of the problem and then change it, change your mindset, shift it step by step. One step is perfectly enough at the moment.
Yes, exactly. And this is all about The Psychology of Money by Morgan Housel.
And we have covered from how to shift your mindset to the actionable strategies that you can take, which can be really useful to you. So if you have not watched the last 2 episodes that we shared about how to shift your mindset into what can make you really a millionaire, you might not want to miss it.
Yeah, the most important point is to take action. Go and watch it. Go and take action to see your life transform.
Because why most of the people can't be a millionaire is because they usually tend to delay things. They won't want to take action right now because it is too difficult for them. So if you just say, okay, you'll watch it later, or you just put it in your wait list, right? It doesn't mean that you will immediately take action.
Yeah, most of the time, a later often turns to a never.
So stop saying, I will watch it later. Watch it now. All right. And before you leave, there's something exciting for you. Because if you're wondering whether you should stay in your current job to continuously do the best, or you want to find a new opportunity in the other path, you might want to head over to our State of Slay quiz at www.empoweredlion.com/double-S. It's a great tool to help you define your career goals. So, thank you for joining us on this episode of the Future Builders podcast by Empowered Liion. We'll be sharing more fulfilling insights to you in the next episode. So don't forget to subscribe to our channel. Stay tuned. Bye!